Hey yo, what's good people? Right here is Mr. TCee, aka Mr. BOR. Welcome back to the best trading channel for synthetics. It's been a while, so due to many people who are in my inbox requesting me to do a video explaining on how exactly to take snap and risk analysis using the BOR. So today I decided to dig down doing further explanation. So you need to watch this video till the end so that you won't miss anything. Okay, to make things simple, right here I've got a 200 account which I pushed from 200 to 2300. This is daily, and also right here I've got hot trade account which I pushed from 200 to 700 plus. Okay, this is how your results looks if you stay loyal and if you stick to one strategy. Okay, you know, it's not wise to be jumping from one strategy to another. Just better to find one that you master and then you stick to it. Okay, so I'm gonna take you step by step on how exactly I managed to flip this accounts. So by the end of this video, if you still have any question regarding the BOR strategy, you can write in the comment section so that I will go through all those comments, because at the end of the day, what is more important is how you understand the strategy. Okay, because it doesn't make sense to just see me flipping accounts while we are still blowing. Okay, I expect you to replicate the same process and also come up with the same results. That's the purpose of this channel. So without wasting much of your time, let's slide deep into today's episode. This is the setup which I took. The first thing I did when I was trying to analyze this pair is to look for an area where a trend line and a horizontal line intersect. Okay, this is the scenario I was looking for. You see, on the intersection, an intersection like this, and then right here, that's where I anticipate the market to bounce right here on these points and then start going all the way up. So what I did, I connected there horizontal line. Okay, remember the horizontal line are the one which help you to see the actual turning points so that you can have the intersection. So I marked my horizontal line. There's this resistance and there's this support, there's this another support, another support. Okay, another support. So the reason why I draw horizontal line is the support and resistance are the turning points. Here's proof that these are the turning points. You see, the market made a bounce right here. It came again on the same zone. It made a bounce right here. It made a bounce right here. It made a bounce. So the fact that it was respecting on this one, it was obvious that right here it was actually going to respect again. Okay. Remember when I analyzed this from 1000, there was no history on the right side. The only thing that I had was this support zone. Okay, now that I have marked my support and resistance, the next thing is to draw the inner trend line which makes the intersection. Right, I chose this point for my sloping trend line. This was the first point, and then this was the second point. Remember, I was targeting this area. Okay, I was targeting this area. So this was the first, second, and that makes this trend line valid, because a trend line is considered to be valid once it touches first 2 points. Right, so it touched right here, and then right here it came and then made a breakout for me a support. This is proof that the market respect support and resistance, because it came right here on this support and then it failed to break below this level, and then it came again on this resistance, failed to break above this level. So it was obvious that once it comes right here, it was going to bounce, because right here they are confirmation, which is the horizontal line and then the inner trend line, which makes the intersection. Right here, that's where I was anticipating for the market to buy. Remember, I did this on 24-hour time frame, so I had to switch to 4-hour time frame to see how the market is going to react to my analysis. So this is on 4-hour time frame. On 4-hour time frame, you know, there was a reversal pattern on 4-hour time frame. You know, a reversal pattern forms when the market reaches a certain level and then it's about to change direction from downtrend to uptrend. Okay, so on 4-hour time frame, I had to consider this as a double bottom. You see there's a peak and then there's another peak which is right here, which means this was obvious that the market was about to turn. And besides that, I had to look for a formation of the candlesticks. You see, when the market was going down, it was forming this candlestick with long tails. Okay, the market is pushing the price down. You see, these are bearish candlestick. These are all bearish candlesticks. Okay, there's no any bullish candlestick right here on this chart. These are all bearish candlesticks. But then as soon as it touched on this area of interest, this is the area that we are targeting. As soon as it touched right here, you see this candlestick. Okay, this is a bullish open rejection. Okay, this is a bullish open rejection, which means price have reached a certain level where it is failing to break below. So as soon as it appears, which means all the confirmation were confirmed right after this bullish open rejection candlestick, another was formed somewhere right here. So this was obvious that the market have changed direction. Okay, this was obvious that the market have changed direction. So I took my buy right here, and then as soon as I took the buy, you can see the market started shooting all the way up. You see, the market started shooting all the way up. And then the fun thing is, I didn't hold this trade for too long. I think I entered somewhere right here, and then as soon as it reaches this level, that's when I closed this trade. Okay, that's when I closed this trade. So imagine if I managed to hold this trade all the way up, maybe to this level, instead of moving out with $1,000, I could have moved out with more than 10,000 or 15,000. Okay, so what makes you a profitable trader, or what makes you make money in the market? There are so many things which need to be involved, right? The likes of patience, not closing the trades with immature profits, right? So this is the reason why I took BOM 1000. Remember, when you're using the BOR, the only thing that you have to look for is the intersection, right? This is where the market usually turns, on the intersection, right? There's a sloping trend line, and then there's a horizontal line, and then right here on the intersection, that's where you have to anticipate a bounce. And this is the same scenario I was looking for. As soon as everything is confirmed, boom, the market went all the way up. Let us move to world trade. This was daily. So this is flip 1x setup. As you can see, the analysis is still there, and I think this is much clearer than the BOM 1000 pay. So let me take you through the process. What was the reason behind me taking this trade? So first thing first, let me do this. First thing, I had to mark my support and resistance. You see, this area very important when you're doing analysis, because in the future, that is the same zone where the market is coming to respect. Okay, so remember, when I did this analysis right here, there was nothing. Okay, the only thing which I had right here was this peak, but then there was no any movement right here on the right side. Okay, I only had this history. So after putting this horizontal line, I had to draw my inner trend line connecting the sloping trend line, connecting the sloping support and resistance. Remember, the support and resistance doesn't come on a horizontal line only. It can be sloping, like what has been happening right here. So when drawing my trend line, this is the first point which I used, and then this was the second, and then the rest was history. As you can see, the accuracy of the trend line, there's first touch, second touch, third touch, and then fourth touch. You see how the market was respecting the trend line. The fact that it managed to bounce on all this zone, it was obvious that as soon as it reaches right here on the intersection of the horizontal line and the trend line, it was actually going to bounce. Remember, we're just looking for the scenario whereby the support horizontal line and the trend line intersect. Okay, this is our area of interest. So every time when you are doing analysis, whether we are looking for a buy, when you are looking for a buy, you have to look for something like this, right? You have to look for something like this, whereby the sloping trend line reaches the intersection, and then you expect a bounce, right? And every time when you are looking for a sell, you have to look for this scenario, right, whereby the market reaches the horizontal line, and then on the intersection, that's where you anticipate the market to bounce and then start go all the way down. Okay, so this is the same situation, this is the same scenario which I was looking on this setup. That's the same scenario which I was looking on this setup. And then the fact that I managed to find the intersection, the next thing was to switch time frame from 2 hour to 30 minutes to look for a reversal pattern. So let me do this. Let me look for a reversal pattern, and as you can see right here, we have got a double top, and the double top is a pattern which appears when each and every time when the market is about to change direction. Right here it was on an uptrend, which means now we are looking for a double top which shows the trend change from uptrend to downtrend. Okay, so this is exactly the thing that I was looking for. So I can actually say this was the third confirmation, right? This was the third confirmation, and as soon as I saw this previous peak, I also expected another peak on the same zone. Okay, I once talked about the how the M-shaped appeared. Remember, I said we have these three types of M-shaped: the one which is equal, and then the one which have first leg above, first leg below than second leg, and then we have this one which have the second leg below than the first leg. And in this scenario we are working with this one. Okay, so after that I managed to saw after that the reversal pattern appears. Then the next thing was to look for candlestick formation on the area of interest, right? The candlestick formation on the area of interest. So let me zoom in and see how the candlestick behaved when the market was about to reach the area of intersection, right? So right here the candlestick hit high momentum, right? It had high momentum, but as soon as it reaches the intersection, you see the candlestick dropped. It changed color from bullish to bearish. So this was another signal, this was another confirmation that the market is about to change direction from uptrend to downtrend. So I had to wait for the first candlestick to close, and then the second closed, and then the third closed. And as soon as the second closed, the third closed, I took my sell somewhere right here. Okay, that's where I took my. As soon as I ended my sell, boom, the market dropped all the way down. As soon as I took my sell, the market dropped all the way down. So one thing that you need to know is I waited for this setup for, I think about because when I saw this setup, I think I saw this setup around 19 September, which means from 19 September to 22 September, I was actually waiting. Trading is not always about pressing buy and sell. To know that sitting in front of your laptop while you are waiting for a setup to be ready is also part of trading, right?